My objective during this presentation, we've covered disclosure and reporting and very much where does that lead to and how is that used. My objective, I'd like to share what's coming from the market side, the sentiment, what we're hearing, and also how this compares with the work that we're doing, that we've been through to produce the benchmark. It is complicated, as John and as Shamila have alluded to, making sense of all the different frameworks to come together and create a globally relevant framework. Next slide. Hopefully most of you are already aware of the World Benchmarking Alliance, but just by way of reference, we are well recognized in the ecosystem. We are free and publicly available. That's what makes us in particular stand out. We share our data, our methodology. There is no black box. And we very much welcome you leaning into the methodology and the consultation that we've been through to create this benchmark. There are existing benchmarks already available. We have 7 systems that we're approaching, that we're working on. The finance system is coming later this year, as Louise has mentioned. But the existing benchmarks, a number of them are well established. They're already used by a lot of financial institutions in their investment processes and their due diligence. So I think in terms of the practicality and the use of this, we know that it's already there and recognised. In fact, I know that a number of institutions already have us embedded in their Bloomberg terminals, and that's very much the ambition that we want that to be across the board. I think the important point that you all know is that the finance system amplifies, and as you'll see in this wheel we wrap around the edge, you are the connective tissue across all the world systems. In terms of the expectation of the finance system to deliver the world and the economy that the world wants, it's huge. I could spend my whole day speaking to civil society on the anticipation of what's coming out of this benchmark. So I think that the role that you play as regulators on this is important as we dovetail together. Next slide. I also just want to touch on the role of benchmarking, because the debate that I face constantly is, does benchmarking work and what is its role in its system? I think depends very much your point of view. We are finding that it is very relevant. We're recognised. I would urge those that aren't familiar with it is to pay attention to the impact management platform. John talked about convergence and the number of standards and benchmarks that there's so many out there. How do you make sense of them? The impact management understands the need for that. What we're finding happening with benchmark and comes out of it is the peer-to-peer learning, that we are building the bridge as we cross it, so to speak, and creating new frontiers. And the learning that happens in one market, sharing it across to others is essential. I think also in terms of what we're seeing in terms of decision making for regulators, I noticed a question in the chat. We sit within the feedback mechanism. The World Benchmarking Alliance sits on steering groups and consultation into numerous principles and guidelines because of the consultation that happens across the different stakeholders that feeds into setting principles and guidelines. I think it's worth noting that the impact management platform is supported by the UN Environment Programme, the IMF, the IFC are on there, and the OECD. So disclosure is all well and good, but it's how does it get used? And there needs to be a progress reporting and mechanism that shows where the financial institutions are and where they need to go to. I think a really important point that I've got on here as well is having a cultural conversation for debate across stakeholders. It's toxic at the moment. 25 years in finance, I think other than quantitative easing, the debate around ESG and sustainability is incredibly polarized. And where benchmarking comes in and the convening after that is we create a space and an environment for logical, calm and rational debate in terms of where we're going, where the focus needs, and where we collaborate to move forward. Next slide. Just want to touch on our objective within World Benchmarking Alliance, and in particular this finance benchmark. We want to move the dial. I think the finance system is ready for it. We can hear that already with the institutions that we've been speaking to on this first assessment. In terms of moving the dial, that means moving out of reporting and the sustainability teams and moving it into mainstream finance. We're already starting to see that, but there's still more work to be done. I think also we talk about strengthening, and very much this is about being relevant. We don't want to be shrill. We want to be relevant to the work that you're doing as regulators. We want to be relevant to investors and financial institutions, and obviously to civil society and their expectations as well. We want to be a guiding North Star through all the noise, and where we can come together on that direction of travel that John mentioned. And finally, on sustaining, we want to be, and I think we're already there, is create certainty across yourselves and across the other stakeholders that this benchmark will endure, and we're a point of convergence again to come back and see where the market is working, where it's not, where regulation needs to step in and fill those gaps. Next slide. So just a recap on our benchmark. So there are 400, we call them keystone financial institutions in there. So they're banks, asset owners, asset managers, and insurers. But within there, that also includes pension funds, including state pension funds, sovereign wealth funds, development banks, as Louise mentioned, the IFC are in the hot seat as well, and also in consultants, investment consultants who influence the flow of money. So ultimately, this isn't the Johannesburg Stock Exchanges. The stock exchanges aren't in there because, as mentioned, that you are a conduit. We are looking for those that decide where money flows. And it's simply not just based on size. We've also looked at regional dominance and the ability of these institutions to influence the system, influence the game, and also policies. So as mentioned, the first assessment is being put together at the moment. It is a huge moment for us. The first deadline was the beginning of this week. We have been speaking to institutions around the world. I'm happy to answer questions where I can without giving too much away, probably in the questions section later. As you would imagine, there's a geographical influence that we're seeing in terms of where the level of maturity is on sustainability reporting. There are some institutions that we've taken by surprise who aren't used to being benchmarked themselves. They are used to holding others accountable. But overall, it's positive. They recognise that they have a significant influence. What we're also noticing is kind of the eureka moments of those that are currently adding resources to teams on sustainability and trying to work out those priorities and looking at the work and the methodology out of our benchmark has helped them prioritise. So I'd say at the moment it is more or less positive. I think the really important point to make as well on this is it's not optional, unlike ratings agencies and some of the other sort of for-profit. Those institutions, if they engage, we want to show the good work that's being done, and we want to show the areas where improvement's needed. But none of these institutions are allowed to opt out. Next slide. So trying to create a methodology that covers globally all those different types of institutions is challenging. We've condensed it down to 3 pillars. We're going for being broad, not deep. So we want to keep the relevance there and make sure that we are credible across that ecosystem. We are focused at a group level. We believe that if you get sustainability and disclosure, transparency, the direction travel is set at a senior level, and that cascades downwards. Equally, we want to make sure it's not just a box-ticking exercise, and that the indicators are meaningful. I'm going to give some examples to show the nuance that we've added to those. So we've got, at its core, as you would imagine, governance and strategy, which is a 40% weighting, has the highest weighting given the importance that it flows through the rest of the work that these institutions do. Then 30% to planetary boundaries and 30% to societal conventions. You can see this. Very much urge you to go and look through the methodology, and perhaps we'll share it in the link to it in a chat further on. So just this is culminated in 32 indicators with a number of sub-elements as well. So like the stock exchange, we had to make sense of all of this. It was hard, but that we won't let perfect get in the way of the good. How we approached this was an 18-month consultation. There was 7 regional events, I think 9 roundtables, over 500 written comments, and a good number of expert interviews. But we recognised we had to draw a line in the sand. I think it's important to point out that our benchmark is aspirational, so we do set the benchmark high. We are setting the tone for the direction of travel. That said, we do want to be pragmatic, and we think it's essential that we're relevant. Perhaps if I can go on now into I want to touch on a specific, next slide, please. Are we together? Next slide, sorry. Thank you. So Louise asked for us to give a taste of the sentiment of what came through from the stakeholder consultations and how that fed into our methodology. Now, gender equality is nothing new, you may say. And I just want to flag that World Benchmarking Alliance, the social indicators, the social element is probably our largest area of specialty. We are the home of the corporate human rights benchmark originally, and we have a team who specialise in social indicators. So we have 18 social indicators that are embedded across all our benchmarks. But one particular piece of feedback that we got on the finance system is the specific importance of this in finance, and for that reason we've moved it out of our social pillar, and we've moved it into governance. This means it carries the extra scoring weight, 40%. I think what we also recognise that it is time to lift the baseline of this globally. There's maturity in the issue, and generally it's recognised what needs to happen to tackle this. We know that from a risk management perspective, and you as regulators focusing on risk, wanting stable markets, that basically diversified thinking, I think it's academically proven that diversified thinking helps manage risk. I do recall that there's been some academic research as well on post-GFC, that there was groupthink on a lot of a board level with excessive risk taking, and perhaps there'd be more diversified boards. The risks that taking perhaps would have been less. And it's also, I think, the point here that it is broadly recognised that gender equality benefits the whole economy. So just looping back and why we've got this in our governance, we have focused particularly on women. We recognise that diversity and equality is much broader, and there are more elements to it, but in our particular benchmark we are focused on women. We will pick up the other aspects of this in future versions of the benchmark. What we are looking to do in our particular indicators that you can see here is to remove the bias from organisations, getting away from that excuse that that we don't have enough women because there aren't enough that are qualified to do the job. You'll see here that we have, as well as a board level, we're focused on senior leadership positions. Feedback was that it needs to include senior executives and management. Again, to create that culture of following up and flowing up and through into an organisation, and to stop the women that fall out of the workplace when they have children. You will also notice that we've got a 40% hurdle on women on boards and in leadership positions. 10 years ago, it was set at 30%, and that is off the basis that there's research shown that you need at least a 30% representation of women or diversity on a board. Otherwise, you end up with conformity to the majority. Women represent 50% of the population. I think that's over aspirational at the moment. So 40%, 10 years on, is where we should be. That said, we recognise that there's a regional nuance to this, and there's cultural barriers. So setting hard limits for all of them is tough, which is why we've got the time-bound target that's been added in there specifically into the wording. So the idea is that we've got a indicator which is mature, We know what needs to be done. There is a lot of feedback from civil society on it, but we also want to incorporate the nuance of regional and cultural differences. Next slide. Nature and biodiversity. Climate is front stage and centre. John's touched on that. Nature and biodiversity, however, is intimately connected to climate change. They almost are hand in hand. Lots of the maturity on reporting is on climate. I'm sure you're all aware that nature and biodiversity is coming around the corner from a global regulation perspective, and the role that the private sector has to play on that. I think some of the statistics that you'll see, half the population are reliant on what we call natural capital, and biodiversity is the living element within natural capital. I think there's 44 trillion at risk, according to the IPBES, which is the biodiversity equivalent of the IPCC. Now, when we look at from a risk perspective, and you as regulators, businesses that rely on natural capital will be at risk if the loss of biodiversity continues at the rate it's at. That business risk will translate into the finance system, and into the finance system, then that cumulatively can create systemic risk, and that in turn into market shocks. And I think it's fair to note that, you know, with the pandemic, we've had a taster of that. There obviously very different opinions, but generally accepted that the virus has moved from animals into human, and we are operating outside our safety zones. So the importance of biodiversity isn't just from the necessity to protect the environment around us; it's also important for business. Now, because of this, we have 4 specific indicators on biodiversity, which cover strategy, obviously identification of the impact that's been had, links that focuses down to sector, location, and there's a monetary amount of percentage on the portfolio. But what I want to particularly focus on on our indicators is on the role of engagement within the finance sector. Again, we recognise that this is nuanced globally, especially in emerging markets, and that one size doesn't fit all. We also recognise that there isn't maturity in this indicator at the moment. The tools and the metrics aren't yet in place; they're being built. But what we learned from our climate work is the role of engagement, and how you craft our indicators to incentivise and create an environment where the finance sector can be have a positive impact on the work that they do. So if you look through these indicators here, we're looking through to the impact on engagement. There's the policies that they have in terms of the flow of money, where they invest, where they're lending, identifying and controlling biodiversity and nature-related impacts, and collectively engaging with businesses. What we've seen on this point, on the assessment so far, it is new, but those that are leading the way in this are typically thematic investors. We're seeing global institutions look at this not just from a regulatory perspective because they know it's coming, not just from a risk perspective, but there is an appetite in terms of the opportunity because of the value on natural capital within their investment strategies. I just want to round up in terms of the path ahead, because the benchmark is the starting point, and disclosure and the reporting frameworks. Next slide, sorry, must remember. Thank you. But where is all this leading to? Ultimately, we will get to a place where sustainability is going to move the markets. I can't give you a timeline on that. I would imagine, but I'm imagining by 2025 with the regulation that's in the pipeline. I think to get there, we're going to need a price, not just on carbon, but on water, waste, and the value of these natural assets. It's going to happen in a series of nudges, and the work that gets done now, and to nudge the finance system into it means, again, we will be managing shocks to the system to make the sector ready for what's coming. I think that the role that you have is both driven from the regulators, but also this is going to come from the investor and the institutions as well. We've noticed this in our engagement with institutions in the US. Obviously, the work that's coming through the SEC is focused on climate at the moment, but what we're hearing are a lot of institutions are pushing back onto their listed companies in terms of reporting and forcing listed companies and where they invest and where the flow of money is to raise the bar. So it is going to be a push-pull from both sides. We very much welcome working with you, with the World Benchmarking Alliance. We'd like to share the feedback mechanism that we've got from speaking with these 400 institutions, and also the work that we do across the full team of the World Benchmarking Alliance on the methodologies and the ratings. There's over 100 people in World Benchmarking Alliance, and I would very much urge you to invite us in. Thank you.